Instant gratification, does it exist? Hey, this is CeoTrades, where money works for you. Today we're looking how instant gratification is affecting the markets. It's affecting those people who are investing for the first time and how big of an impact it has had in their lives. Number one is, if you can see this basic chart here, this purple line chart, all I'm showing you here is basically when we start out, this is zero down here, although you can see that what we do is we put in a lot of money into investing, whether it's stocks, crypto, or something else. It could be a business. And sometimes you get lucky and you go up and move up and you make some money and you get excited. You get very happy. But what happens? What happens? People start to put more in, and all of a sudden, boom, you drop, you lose it all, you get depressed. You're confused. What happened? Maybe you spend a few days, a few weeks without even looking at your account because it's depressive. But this is the reality with the instant gratification phase, is that we think since we made a little bit of money, that now we're good and we know the bottom, the top, all the different types of ways to invest, and we lose this money. But then we start again and we pick up a little bit more knowledge and we gain back a little bit more confidence. Then we lose a little bit. Again, here you're a little bit displaced because you figure, how am I not making my money back? And you take some time off again, and then you research and you come back in, but then you're making money. And this is just to give you an idea. It's not overnight how money works for you. You're gonna make mistakes. I make mistakes. I've made mistakes, and I probably will continue to make more mistakes. But in the end, if you stick with it, you'll make some money, you'll make some returns. You see, we're entering into a recession since July of 2022, and within the next several months, we're gonna have a serious recession where things are gonna be so expensive, there's not gonna be enough work to go around, and you're better off having cash on hand instead of investing it all in the stock market, crypto, or real estate, or whatever other business you wanna invest in. Why? Because eventually there are gonna be big opportunities coming through at a discounted rate, and it's best that you can be able to catch some of these investments on the way down. Right now, cash is king. Having cash ready to make a move when an opportunity exists is awesome, and I suggest that you make some of these opportunities in your realm so that you're able to catch at least one or two opportunities. But this is another thing, is investing it all in one basket. Is that really what you want to do? I highly recommend that you think about that. Is it right? Is it not? Well, remember, I'm not your financial advisor. Always seek the help of a professional in order to make the best decisions for you. But in my case, what I would do is I would pick at least 2 or 3 different things to invest in, diversify. Maybe 7, just like Warren Buffett. He picked 7 stocks, and those 7 stocks are killers. But he's been around a long time. You and I haven't been around that long, most probably. And the reality is it takes time to be able to get some of these things right. And there's a learning curve. You're going to lose some money. You might gain a little bit and you'll get happy. But diversifying is very important. Maybe you put a little bit into crypto. Maybe you put a little bit into stocks. And maybe you put a little bit into real estate. It's very, very important. Just look back here how the main stocks of 2000 and 2020 compare. In 2000 was Microsoft, GE, Cisco, Intel, Walmart. And you can see right here that they made immense amount of money. And this was around 2000. But then everything just went tumbling down. And then in 2008, the same thing happened. And in 2008, we had another crash. And then it picked up a little bit more and it dropped again. But then if you hold on long enough, you will make your money. Because in 2020, Microsoft, Apple, Amazon, Apple, and Facebook all made some great gains 2 years ago or a year and a half ago. And now they're back down. But this has been going on through history. I'm just looking here at a chart from 1990 to the present. And I recommend that if you want to look more into this, into the historical chart, you'll notice that no matter where you jump in, it could be at the worst point. Eventually things go up. But what happens with most people is they forget to cash out when times are right. I would have cashed out somewhere in here, in this area, maybe on the way up. It doesn't have to be perfect. It could have been a little bit lower. It could have been a little bit higher. But this assists you with seeing the realities that most people don't realize, that they have to cash out in order to be able to take some of these benefits. The last thing that I want to let you know is during recessions, what you do as you accumulate cash, you set aside a little bit per month to invest. It's called averaging down. As the stock market goes down, you start to invest maybe a little bit at this level, maybe a little bit at this level, maybe a little bit at this level. Maybe you see it go up and you might want to pick up just a little bit more. And then you just hold until it gets to your level. It might be 1 year, it might be a few weeks, it might be a few years, whatever it is. Hold. See, this was 2008 and it dropped through 2010, 2 years to drop, or a year and a half. And then what, 8 years later, it's up double or triple whatever what we have started out with. It was at 11 and it went up to 16 or so in here thousand. And I mean, this is great, but the reality is it's not overnight. If you're looking to become an overnight success, it's possible, but it's very rare, very hard to do. And I recommend you to have some patience and note that when you put money down, you might lose it, but you might make some really good returns. This is ARC Innovation since they started about 8 years ago, and you can see they've had their fair share of up and downs. You can't see it in this chart exactly, but they've had a lot of up and downs. They had a 45% drop right in here in 2008, and look at, since that drop, look how it has immensely picked up. You could have even forgotten to cash out up here in this area, and you could still have cashed out in here if you would have picked up down here somewhere. Anywhere along this chart you would have picked up, and you're still cashing out now. You're making money with ARC Innovation. In the last 8 years, it's made immense amounts of money. Now I want to share another screen here just so you're aware, and in this screen you can see all the different types of technologies out there. Maybe you want to invest in technology, financials, maybe you want to invest in semiconductors, information, software. There's other smaller companies within the technology area, communications, entertainment, telecom, healthcare. There are industrials, consumer cyclicals, energy, real estate, consumer defense, and so on. There are a lot of sectors to invest in here. You can see that in the last day, everything has been positive because it's in the green, most of it. But the reality is this: if you look at it within the last 3 months, everything turns mainly red. You can see that means it's down. In the last year, since the year started, year to date, everything is pretty much down. There are certain things that are up, but most of us won't pick these right off the bat, and you've got to be aware of that. Now, how about through the 1 year, full year performance? It's still down. Everything is down, immensely down. Amazon is 47% down. Tesla 55% down. Microsoft 27% down. Nvidia 49% down. Most of the major players in Wall Street are down. And what do I recommend on this? If you average down, if you put a little bit now and maybe monthly into Amazon or Microsoft or Google or some of the other ones that are down, eventually you'll make this back up. Just like ARC Investment. There are a lot of opportunities out there, but we forget to do what is needed to do, and it's to have patience, maybe give it 5 years so that your investment is properly taking the time to be able to make the returns that you need. This is CeoTrades. If you want to double your bank account, why don't you invest in your knowledge account so your money market account will grow multiplied? Until tomorrow, we'll look at another session of the markets.